Accounting Superstar Station. This is Professor Don Bush, and I'm glad you're here. I've been an accountant for, about 30 years, a CPA for about 30 years, and a professor for about 30 years also. And I've got a lot of great ways to explain accounting. So let's get started. Today's lesson is for intermediate accounting. It's correcting accounting errors. And today's error is depreciation expense. So here we go. I've got a 7-step process, and the 7 steps go very, very fast. In fact, with a little practice, these 7 steps will become automatic. So let's get started. Here we go. So step number 1. What did the company do or not do? When did they discover the error? So what's going on here? It looks like they made an error at the very beginning of 2001, and they discovered the error at the end of 2002. I like drawing these little timelines because that way I can visually see what's going on. It just helps me understand. So this first step is just trying to figure out what's going on. So what was the error? At the beginning of 2001, a machine was purchased for $10,000. Repairs expense was debited by mistake, and no depreciation was recorded for 2001 or 2002. The machine has a 5-year life, no salvage value, and should be depreciated using the straight line basis. The error was found at the end of 2002, so it sounds like they accidentally expensed the machine at the beginning of the year. Very easy to do. And so we've got to fix things. So they made a mistake. So what does this mean? What are the implications of this? So here's the result. Repairs expense for 2001 is overstated. Equipment account is understated for both 2001 and 2002. Depreciation expense and accumulated depreciation have not been recognized or updated for both 2001 and 2002. So when did they discover the error? At the end of 2002. So we want to fix mistakes as soon as we can. So step number 2 in the process. Were there any incorrect entries done or not done? When and what were the incorrect entries? So we want to find out, well, what did the bookkeeper or accountant do? Well, on January 1st, 2001, they debited repairs expense and credited cash. There we go. That was the mistake. In 2001 and 2002, an entry to record the 2002 depreciation expense and accumulated depreciation was not made. So there was no depreciation expense for either year. I've got listed here an entry to record 2002 depreciation expense, but that should be 2001 and 2002. So coming down here, step number 3. Well, what should have been done? What correct journal entries should have been made if done correctly? And I like doing this step because this helps make it clear in my mind what we want the books to look like after we get things all corrected. All right. And we can't just make these entries because the books for 2001 are probably all closed up. So, but this is what they should have done here. They should have debited equipment back in 2001 and credited cash. And they should have recognized depreciation expense and accumulated depreciation for each of the 2 years, and they did neither. But this is what we're aiming for. It gives a good target, something to aim at when we're trying to fix things. So the next question, step number 4, we have to determine, are the books closed or are they open? Well, 2001 was a long time ago, and the books are closed. So what does that mean? Well, it means that all the revenues, expenses, and any other income statement accounts have been closed to retained earnings. And what does that imply? Well, it means we cannot make journal entries dated 2001, and we cannot change journal entries dated 2001. The income statement has been closed to retained earnings. So all of these 2001 accounts are off limits. Can't touch them. And in 2002, the books are still open. This is a good thing because that provides us a lot of flexibility. All the accounts can be changed. And 2002 errors can be reversed. Also, we need to avoid creating new errors. It's very easy when you're trying to correct the books to actually make the books worse. And if that's the case and that happens, it's not a big deal. It's not a problem. We can just reverse out the entry that we did and start over and try again. So coming down to step number 5. Step number 5 is one of my favorites, but we're not going to be able to use it this time. If incorrect entry made in current year and books open, reverse out the incorrect entry made in the current year. Just reverse it out, get rid of it. But that's not the case. Going up here to the entries that were made by the bookkeeper, right here it says in 2001 and 2002, an entry to record depreciation expense and accumulated depreciation was not made. So this is not available to us. So there's nothing to reverse out. Nothing that we can do about that. So we go on to step number 6. Let's try to patch things up and fix things. Well, number 1 here, we need to recognize that we have equipment. And by the way, all these journal entries are done in 2002. The books for 2001 have been closed. So we're going to debit equipment for $10,000 and we're going to credit retained earnings for $10,000. Now, I wrote a little note here. We're crediting retained earnings, and I put a little note here, meaning that it's taking the place of crediting the 2001 repairs expense. We can't touch the repairs expense in 2001. It's been closed, and so we don't even want to try. And if we did credit repairs expense right here, that would mess up 2002. So our only option is our very best friend when it comes to correcting entries, and that is retained earnings. That is it. And it also makes sense too that by crediting retained earnings, we are increasing the balance in retained earnings because it was too small at the end of 2001 because of that big repairs expense that was accidentally recorded. So coming down here, well, let's record the depreciation for 2001. Well, here's how we do it. We're going to debit retained earnings, and I have a little note here. It's a 2001 depreciation expense. We cannot touch the 2001 depreciation expense. Those accounts have been closed, so they're off limits. So all that's left is our very best friend when correcting entries, retained earnings for $2,000. And by the way, that's if you take the cost of the asset minus out any salvage value divided by the number of years, you'll get 2,000 here. And you can go back up and look in the information to see how that $2,000 was calculated. Now we're going to credit accumulated depreciation because we need to bring that up to speed here. And this is for 2001. Now for 2002, the correcting entry is slightly different. In 2002, all the accounts are available to us. The books have not been closed. They are open. So we can debit depreciation expense for 2002 for $2,000 and credit accumulated depreciation, and that patches up and fixes the depreciation expense for 2002. I like to do my entries one at a time and try to do them as simply as possible for a couple of reasons. It's easier for me to understand. Also, a second reason is that it provides a better audit trail too. However, your textbook likes to combine everything into a group, into one entry, and maybe your professor prefers it that way. Either way, it's easy to do. What we're going to do here, just to make our answer in step number 6 look like the textbook answer, what we'll do is we'll combine these 3 entries and make one big giant entry. Here is our combined entry right down here, step number 7. We're just trying to combine it and simplify it. You don't have to do this. What we did up in step number 6 is perfectly fine. In fact, I prefer the way it was done in step number 6. But if you feel like you want to combine things and simplify things, all we're doing is taking these 3 journal entries and combining them right down here. So we're debiting equipment for 10 grand. We have depreciation expense as a debit for 2,000. There you go. We have accumulated depreciation for 4,000. That's if we take this 2,000 here and this 2,000 and add them up, we get 4,000. And retained earnings is being credited for 8,000. How do we get that? Well, we've got a credit for 10 and we have a debit for 2. Well, 10 minus 2 is 8. So here's the journal entry that would look just like your textbook if you want the textbook answer. Folks, I hope this lesson helped you out, and I hope you're getting the hang of this 7-step process. It goes pretty fast. And if it helped you out, hit that like button and subscribe, and I'll see you next time. Over and out.